Hi, Larry Gaines, Power Cycle Trading. In this video, I want to show you a trade setup for a downside move on SWKS. And this is a trade setup based on directional, based on using our trading model with momentum showing us direction, and then setting the trade up using a first entry trade one. I call it a put debit spread. And then I'll show you another thing that we can do to adjust this trade and convert it to put condor if we want to. So let's go through the trade setup first off. So Skyworks, you can see we've had a swing low to high. We've broken down through that 786. We're coming down to that prior low point right in here at the 786, or this 100% retracement level there. And what we're looking for is this thing to break below, probably test 88, potentially go back down here to 86. And if we got even a further move, we could go to 83, right around that 84 level, which would be a 1272 extension. So this directional trade setup was based on our trading model, which shows, you can see here, this is cycle 1, 2. So momentum, we get direction, price direction from the momentum we're seeing in the market. And this is a measurement of momentum, cycle 1 and 2. So you can see it's negative below 0. So that gives us a probability that the direction will be down. And then we get, you can see these are our signal trigger indicators for momentum right here, this red arrow, yellow arrow. And we also had a reversal right here, so that purple, magenta. So technically this looks like a push lower, and then we use our Fibonacci levels to see where we could go. So this is the first target here. It's been hitting that right now today, and then we're looking for a potential move down here to the next low, which would be right in here at about 88. And then the next ultimate low would be right here. So if we get a bigger flush down, then the thing we could do is we could sell an out-of-the-money bull put credit spread, converting the put debit spread into a long call condor. So let's take a look at the option trade setup. So the initial trade yesterday, we set up a September 21 series at 89.5, 87. Very tight put debit spread. So risk is $87 debit paid. And what I like to do is, like, I'll risk maybe 50% of that. So if it went down to 40, 30 cents, that would be the stop. Now it's currently up a little bit here, but we're looking for a target here right now. We're trading currently right at 88.91. So that's kind of the first target. We're looking for a flush through there. And if we get a bigger move down, our next level will be 88 right here, and then ultimately down to 86. Now, if we get a flush down towards 86, one thing we could do is we could sell then a bull put credit spread, looking at that potentially being the bottom, converting this to a what we call a call condor. So we could look at maybe selling the 85.80 bull put credit spread here. This, if we got down lower, this would be over 50 cents, but this would then reduce our risk to as far as the cost of the trade. We'd have a little bit more risk to the downside, but we're taking a bet that this is not going to go too much below 85. So then if it went up between 85 and that short strike of 87, this could make over $213 on our upside risk of $37 there. So this is a couple things that you can do that I always like to look ahead to plan the next setup if things go our way or if things don't go our way, to do adjustments. So I hope this helps, and I'll talk to you on my next video update.